This week's winner, every recent IPO that's been riding the rally. This week's loser, anyone who thought the rebound was going to stay narrow.
And with 7 IPOs lined up for next week and SpaceX's roadshow imminent, the calm before the storm is officially over. Let's get into it with this week's winners and losers.
Quick note before we dive in, this podcast is for informational purposes only, and nothing we discuss should be taken as investment advice or a recommendation to buy, sell, or hold any security. Past performance does not guarantee future results, and one cannot invest directly in an index. For the full disclosure, check the end of this recording. So let's walk through the week because the headline is what's coming, not what just happened. The newsletter frames it perfectly. This was the calm before the storms. And yes, storms plural, because there are two distinct ones lining up.
Right. Storm 1, 7 IPOs next week, tying the busiest week since 2021. Two are raising over a billion. Now Storm 2, SpaceX Roadshow launching late next week.
Yeah, and the backdrop is pretty extraordinary. The IPO index ended the week up 6.6% compared to 1.4% for the S&P 500. So that puts the index up nearly 24% year to date, more than double the S&P's 10.7%.
And that gap, or rather back-to-back gaps, is the real story. The IPO market isn't just participating in the rally, it's leading it. That is a complete role reversal from where we were 2 months ago.
Yeah, it feels like a real reversal.
Hmm.
So let's move to the deal side and start with what's pricing next week. We have 7 deals, like you mentioned, Matt, tying the record for busiest week since 2021, two raising over a billion. And the themes are familiar, but the volume is definitely new.
Right, so we've got a company called Applied Aerospace and Defense. That's our defense play. It fits with the year's dominant theme. We've also got INEO Holding, an AI infrastructure and power company. They produce natural gas engines that kind of feed into the data center demand there.
hmm and then we have Quantinuum, which is the moonshot, quantum computing, a space that until now has really been restricted to SPAC mergers. So that's pure speculative growth, but may do well in a market that's been rewarding lottery tickets.
And with Continuum too, they do have their publicly traded parent Honeywell. So if investors are comfortable with Honeywell, they may buy into Quantinuum. Other deals lined up for the week, we've got Whitehawk Minerals on the energy side. So just to recap, we've got defense, AI infrastructure and power, quantum computing, and oil and gas. So that's really been the 2026 IPO market in a microcosm.
hmm But we have to talk about the most interesting name, which is Liftoff Mobile. This one tried to go public earlier this year, but ended up withdrawing, now refiled and aiming to be the first software IPO of the year.
And that's a meaningful first. Software has been the most punished sector this year. The AI disruption overhang on SaaS has kept issuers on the sidelines for months. And, it's no coincidence that we've seen a strong rally in close comparable AppLovin or other high-profile software stocks this week, like Snowflake or, the recent rally in Datadog.
And if Liftoff price as well, it cracks open a category that's really been frozen. So that's much bigger than the size suggests.
Hmm. Now, of course, one deal does not make a trend, and Liftoff's proposed valuation is well below where it was during its last attempt. But it does test the thesis, and the answer matters for dozens of software companies sitting on the pipeline. But
hmm
let me ask you a question, Avery. Is Liftoff coming now to ride the SpaceX tailwinds? Are people going to think this is like a rocket company, Liftoff Mobile? It's got the rocket ship in the
Perhaps.
logo.
Yeah, they're just hoping, look at the logo, nothing
Yep.
else. Yeah, so now let's talk about that second storm because it kind of dwarfs everything else. And of course, talking about SpaceX, the company is rumored to launch its roadshow late next week, pricing mid-June, June 12th to be exact, reportedly. The S1 dropped last week, and now the actual deal mechanics are about to start.
Right, and as the newsletter puts it, SpaceX couldn't have asked for a better market. The IPO index is ripping, sentiment is risk on for sure, and AI names are leading the way.
Yeah, definitely no accident on the timing. Issuers and bankers read the tape, and this is the most receptive backdrop they've had in years.
And what a stark contrast from 2 months ago. So it looks like the IPO calendar isn't fully clearing the way for SpaceX either. We've got new filings this week from Entrada, Doncasters, and Cardigan. Those could all price the week after SpaceX. I know that's been a story, will this crowd out the calendar entirely? Looks like not. We've got some more deals lined up after SpaceX.
Yeah, that's an important read. Historically, mega deals kind of consume all the attention and starve the rest of the calendar. I mean, you can even look back to something like Facebook back in 2012.
hmm
But the fact that issuers are willing to file alongside SpaceX says the demand pool is actually deep. I think it is worth noting that we might see little else on the calendar leading up to when SpaceX prices, but it looks like it's going to crack wide open after that.
Right. We've got the seven deals next week, and then I think SpaceX will probably have the following week all to itself. And then after that, we've got more deals, assuming SpaceX does not flop. If that happens, then all bets are off. But yeah, just to emphasize the software point from earlier, Entrada, a real estate management platform. So, after Liftoff Mobile, that's multiple software companies kind of testing the waters. It's a pattern. We'll see if it turns into a trend.
And it ties into a bigger theme because the mega IPO picture just got a lot clearer. We have AI giant Anthropic raising $65 billion dollars at a $965 billion post-money valuation. So that's more than double its $380 billion value from just February, and kind of totally eclipses OpenAI's most recent round.
Right, that valuation jump in 4 months is just staggering. Everything about this is staggering. The financials reportedly support it too. Nearly 11 billion in quarterly revenue, growing 130% year over year, with an operating profit. So just for reference, SpaceX had 4.7 billion in revenue in the first quarter, 15% growth, and 2 billion operating loss. So really some very impressive numbers from Anthropic here. I think that justifies that valuation.
And that gets glossed over a lot by retail investors, I think, who aren't digging as deep, because Anthropic isn't just a high valuation private company, it's EBIT profitable. That changes the IPO conversation entirely, especially considering how capital intensive AI tends to be.
hmm And the timing now points to a fall 2026 IPO. So we've got SpaceX in June, OpenAI reportedly in September, and then Anthropic in the fall.
hmm All three of the big three mega IPOs in 2026. That's a calendar that wasn't really shored up or even likely 2 months ago.
Right, yeah. I was thinking, we'd obviously get SpaceX, but I was thinking we'd be lucky if we got one of the other two. Now it looks like we're going to get all
hmm
three. Uh, So each one creates kind of its own form of market gravity, you might say. SpaceX brings in the retail and space enthusiasm. OpenAI brings in consumer AI, one of the hottest brands in AI platforms. And then Anthropic really specializes in that enterprise AI thesis.
hmm So three different stories targeting maybe a similar investor base, but all hitting the public market in the same year. That's a structural shift in what the IPO market looks like.
Mhm.
But yeah, we need to address the obvious concern because the newsletter raises it directly. A healthy amount of FOMO can drive outsized returns, but recent stock market corrections are still fresh in investors' memory. So, how sustainable or really how believable is this recent rally?
Yeah, and I've got another cautionary data point for you. Cerebras down more than 20% from its first day close. So you may recall Cerebras was the deal 3 weeks ago, 68% pop on day one with a $5 billion deal size. Now it's given a meaningful chunk of that back.
Not a small lesson. Cerebras priced at more than 90 times trailing sales. Only four other companies outside of healthcare have done that since 2021. So price to perfection turned into price to disappointment pretty fast.
Yeah, which is why next week is such an important test. Seven deals, varied sectors, including a moonshot like Quantinuum, how they price, how they trade. That'll reveal where the line is between healthy enthusiasm and what's been overshot.
hmm Experienced investors know to own IPOs across market cycles, but discipline matters way more, definitely not less, in a hot market. Casting a wide net is often not the answer, but I'd say that's especially true when hype and FOMO are high.
hmm And the risk isn't that the market is wrong about AI so much. I think it's more that, pricing reflects the perfect outcome, and that rarely happens. I think that's been the lesson with Cerebras so far. Now, of course, we're still in early days. This is a bet on a multi-year trend. So I don't want to hit the company too hard, but
Hmm.
it really does point to, not buying into the hype too much. And
Hmm.
just to step back a bit and talk about, what we've seen in the market and the volatility there. Avery, I know last month Bill said that the Iran war was holding back markets and that once the war was over, stocks would rip higher. But I don't know if that's right. Clearly, this week has shown us what the stock market truly loves, what investors love, is a constant barrage of contradictory headlines on Iran. I'm kidding, of course, but if an investor doesn't trust this rally, I am sympathetic. It's hard to explain too much about what's going on. You can point to earnings, but if you try and point to geopolitical headlines, you're going to be flip-flopping back and forth every other day. So I think that's why, as an investor, you stay invested, and as an issuer, I mean, it almost doesn't matter why the markets are going up. You go public when you can. So I think that's what we're seeing now with these filings and launches.
Yeah, that's a really good analysis because it's hard to explain why things are
Mhm.
going so well, but the evidence is right in front of us.
Hmm.
And with that, let's look to the scoreboard for existing new stocks because we had another strong week with a notable shift. The IPO index up 6.6%, S&P up 1.4%, and this time software names led the winners. So that's new.
Yeah, and Reddit took the top spot in the index, up 24%. Social media platform is getting re-rated higher. It's a meaningful name leading the index this week.
And the broader software and advertising strength matters in the context of Liftoff Mobile coming next week. The sector is showing signs of life right when a new software issuer is testing demand.
Now, energy and aerospace names land at the bottom of the IPO index this week as investors take gains on the possibility of an end to the Iran conflict.
And if it's a sign of peace in the Middle East, that's the kind of sector weakness I'm happy to see. Defense and energy under pressure because geopolitical tensions are easing is a positive macro signal, even if it hurts individual names.
Fair.
Yeah. So, zooming out, what does this entire setup actually mean? This is the IPO market we've been waiting for literally years now. The newsletter says it plainly, and the data supports it. The IPO index up 24% year to date, 7 deal week incoming, and now three mega IPOs queued for 2026.
Wow. Yeah, and the breadth is what's new. For most of the year, the rebound was narrow. We've had defense, AI infrastructure, biotech, energy. Now, software is showing signs of life. Liftoff is testing the window next week with Entrada not far behind. Other sectors emerging, financials, for example.
Yeah, I feel like we were just talking about the buckets that we were seeing and kind of not straying from that. So this is definitely a structural shift in the calendar. And now SpaceX in June, OpenAI and Anthropic in the fall. That's a year that rewrites what's possible.
And the risk is the same one that we have been flagging, price to perfection in too many places all at once. We pointed to Cerebras earlier and a few others that are getting kind of too hot on day one and falling in the aftermarket. So as an investor, you need to watch out for that. And that can happen to more names if reality can't match the hype.
Yeah, and the discipline question is the right one to ask because it's not whether the market is open, it clearly is. It's whether buyers are pricing realistically.
And next week, we'll hold the answer. We've got 7 deals, varied profiles, all pricing in a hot market. We'll see how they trade.
Hmm. All right, with that, what are we watching as the storms hit? Definitely all 7 deals next week, but especially Liftoff Mobile, first software IPO of the year, and that outcome has the potential to carry some weight through the coming months.
Right. We've got SpaceX roadshow launch. We're looking at the number of shares they're going to offer, the pricing range and the target valuation, the retail allocation, and the ultimate timing of the deal. So we'll know a lot more by the end of next week, but that's what we'll look out for.
Hmm. And definitely the aftermarket on Cerebras and the other recent pops. The question is this 20% pullback a one-off or the start of a broader recalibration? And that will have big implications for the broader AI wave.
All right. Calm's over. Here come the storms.
Hmm. That's it for this week's winners and losers. So get the full newsletter in your inbox by clicking the link in the description. Thanks for listening. And before we go, please listen carefully to our full disclosure. This podcast is for informational purposes only. Renaissance Capital statements should not be considered investment advice or a recommendation to buy, sell, or hold any particular security. Certain of the statements contained may be statements of future expectations and other forward-looking statements that are based on Renaissance Capital's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements. Past performance does not guarantee future results. One cannot invest directly in an index.